your trading activity doesn't matter. All right? What matters is if you are making profit. Does that make sense? And that's how business is. If you are selling palm oil, some activities will be going on while you are selling, delivering, buckets will blow, gallon will lost, the transportation will increase, somebody will not pay you, or somebody cheat you, your son threw away half bottle of the palm oil. But at the end of the month, when you are doing check and balance, oh, it's notification, FOGX notification as it came. So let me still observe if I will see more notifications. So what, despite all those activities, if the palm oil seller, are we live now? Yes. If the palm oil seller now was able to, from let's say he invested 500,000, if by the end of the month she's having 600,000, excluding all the expenses and what have you, has she made profits? So why are you guys doing like this now? She has profit, right? Despite all the hiccups, despite all the challenges, despite all the ups and downs in the road, at the end of the month, if there is increase in the capital, no, I'm not just talking about gross profit now, because gross profit is all the money that comes in. For example, what you are seeing now in your profit is net profit, not gross. Traders taking, brokers taking their own spread. They've taken their commission. So what you are seeing now is gross profit. That means it's what you can spend. So if you have picked like 7 trades, and out of the 7 trades, 5 went on loss, but 2 made profit, and then your account balance increased, did you make profit or not? So don't fight your strategy. All right? You must have the right mindset for trading. Don't fight your strategy. Don't fight your analysis. Oh, my trade hit stop loss, I'm angry. No. What you should be angry at is that by the end of the week, by the end of the month, your capital reduced. That's when there's a problem that you need to fix. Do you understand? By the end of the month, from $5,000, you went down to 4,500. 4,200. That is when there is something you need to address. Then that's when you now need to start reviewing your strategy, reviewing your psychology, because you didn't make profits. But despite all your trade, in fact, you might have more losses, more setup that failed, and fewer setup that succeed. If by the end of the week, by the end of the month, you are able to record gain, then you are doing well. So those moments you were angry, you were not supposed to be angry. Now you should now focus on fine-tuning your strategy so that you can make more profits. Position yourself for more gain. Does it make sense? That's how trading is. Trading itself is not business, but as a trader, you have to treat it as a business. If you don't treat it as a business, you will continue to treat it as a game of chance. Are you following me now? You have to treat it as a business. If not, you will be looking at it as a game of chance. And a game of chance is probability. I either win or I lose. However, you have to position yourself in such a way that you are profitable at the end of the day. Not one day. When I mean at the end of the day, that means in a season, in a period. Let's say 1 week. You want to check your trade for 1 week. You want to evaluate and assess your trading for 1 week. Okay, you are looking at 1 week. What has happened? Did my account grow by how many percent? In 1 month, did my account grow by how many percent? Because right now, we have to reduce more of theory. It's now you now need to begin to practicalize and demonstrate. So I will employ you spend more time analyzing, spend more time to begin to check your setups, analyze market, pick trade. Since it's a demo account, pick trade, analyze. Open your laptop, check the market, patient, check the market, analyze, look for your entry points, look for your key zone where you want to enter, and then once price get there, you can set an alarm there. It's possible on TradingView. You can set an alarm. When price get there, let it ring. So when it rings, then you begin to look for your trading idea. So let us look at the market for today. And let's look out for trading idea. So Samson, what's your own total balance? Okay, you went to put 500,000. Okay, our Starbucks failed. Was gold. It was very high. Okay, it didn't get there. Almost got there. I'm not sure he hit it. Our TP2 was at 4,830. Price got to 4,845 yesterday. So let's look at gold now. We have a zone here that we have marked. And in the middle of the night, throughout the night, gold just bought. Throughout the night, all through. It broke this level, area where it once rejected. It broke it. Then now is at another level here. So, is anybody seeing a trade here? Is anybody seeing a trade here? Emmanuel, what trade are you seeing? Buy or sell? You buy. Okay, so why are you going to buy? I'm not saying you are wrong, but why are you going to buy? Because you know why this is very important. Once every one of us, for how long you will be trading, for the number of time we will be trading together, we will not be doing the same thing. Everybody will analyze and pick trade on their own, but you only follow a stringent risk management. Everyone will be following the same risk management, but your trading setup should be dynamic and unique. So tell me why you buy. Okay, yes, use the mic so that those online can hear you. Why will you buy?
While I analyze the market, I noticed that at this point is the key zone, and that's where we're talking about equal highs from this place to this place.
Yeah.
So if we notice our former bias on our anchor time frame was giving us a buy, where it broke this key zone. So my bias is okay when my bias is going to trace back to this key zone. Then when it traces back to the buy, and the buy has to be where this key zone, this place.
Okay. Yeah, right. Okay, you want to buy from here.
Yeah. Yes, sir. Yeah. It is. So when it changes back to this zone, they will pick it by where our TP1 will have to here. Then our take profit too have to eat the second. Now, it's a explanation to him makes sense. And to every trader, it also makes sense. However, me, I will not buy. Don't buy it.
Yes, that one. Makes sense. I mean, it's correct what I'm saying. Why? Because this was a previous allow price to come to this to try it back. I don't know. If the price get you are not just saying once I buy, that profit section pause charts. I'll find a sale. And my explanation is based on what we have been looking at, what we have been studying. This is an area of rejection. Price. And same price rejecting in that same area. This is 5K. I'm saying price trying to break but it's rejecting. It's trying to break but it's rejecting. So with proper trading psychology, trading risk management, why don't I try sell from there since our general bias has been sell? Gold has been selling and he bought aggressively in the morning. Are you getting me? Bought aggressively in the morning, 1, 2, 3, 4, 5 hours non-stop, and it's at an area where it was rejected and collapsed. So that area for me is also a key zone where I can continue the sell. So what I will do is, if I pick a sell now, I can sell to this stage, your area, and then if it breaks below, I sell, I continue with the sell. As a matter of fact, I just entered the sell before I was coming out. And I put my... Yeah. Okay, here, right? Exactly. So I already sell and I already put TP here. Are we following now? So what is more important is understanding areas where price will get to and then begin to react. Either it breaks it or it reverses. And that is your own area of interest. That's your area of interest. And the trade is already going fine. Yeah, it's almost hitting my TP. My TP is at 4915. Just 50 pips more. So it's just to understand your key zones. Very important. Your key zones. And the reason why my sell is not a long one is because I'm also being conscious of the fact that this buying coming in of the buyers was a very strong one. They step in a very big way, but that doesn't still matter. Sellers can cancel it out. But then I'm just mindful. I'm just mindful. So any decision I'm making, I'm being careful of whatever has happened. Then I'm using it to determine what will happen. So as a trader, if you are going to be successful, don't trade carelessly. Don't trade carelessly. Have a reason. While sellers are already coming in slowly, people still have every reason to buy here, and they will explain it for you. Are you following me now? Like I told you, when people are selling, people are also buying. The area where you are selling from, people are buying there, and they have reasons to buy. And you can be so shocked that at the end of the month, both make money. Do you know where they make money from? They make money from careless traders. Oh, those ones are not even traders, gamblers. While you are selling here, I'm buying here, we have another trade. I'm selling, you are buying. By the time by the end of the month, it is possible that both of us make profits. It's very possible. That is when there is a proper risk management. This is the deal breaker in trading. And the major thing about risk management is ability to trade again if one setup fails. Mental ability, emotional ability, and then financial ability. Finance is the last. Ability to trade again after a failed setup. This is it. Why mental ability? If one trade goes bad and it took so much from you financially, it will affect your clarity. If after a failed trade, and the trade went in such a way that you were not emotionally stable. For example, what I mean is, okay, this trade now, you are stepping for a sale, all right? You are stepping for a sale. But because the thing is not going the way you want it, or you went to a lower time frame, he now showing you like 1 minute, he now show you some 3 minutes buy. You now close it and change direction to a buy. You now use a bigger money. All right? And eventually another one candlestick just show up and sold off. It kills you emotionally. Why? Because you were in the right direction before, but you just suddenly switch and then it bites you, and it bites you hard. Then the last one is finance. Let's say this one trade, you say it's going to buy, I'm sure of this buy, and then you have $1,000 left, and then you went all in. Then from nowhere, one candlestick just show up and sold, and took all the money from you. Will you be able to trade again? From broker killer, you now become you become broken. Risk management is about having the ability to trade again after a failed setup. At least you can still trade 10 times after a failed setup. Not a situation whereby it takes so much from you that even to pick a trade, you are just tired. You just became totally broken. Totally broken. Are you following me now? So that's what it is. So don't be afraid to trade. There are two ways to risk management. Be able to trade 10 times, which is aggressive. Then risking 1 to 2% per trade. Then not more than this is conservative. All right, this is conservative, this is aggressive. That's risk management. Per trade, you are risking just 1 to 2% per trade. Max 3% per day. So let's say you are risking 1% per day. First trade, PAM, SL. Second trade, PAM, SL. Let me try in New York session. Third trade, PAM, SL. That's okay. Rest. That day is not your day. Then spend time analyzing why your trade failed. What happened? Go back to your drawing board. Check your setups again. If I had known, I would ask us to pick sell from that place. But we'll find another setup. Do we understand now? Does this make sense to anybody? Then for aggressive trading, at least be able to trade 10 times. That means you have $1,000. That means per trade, you are risking $100. So this money will not finish until you have traded 10 times. And with what we have learned, you should be able to see 5 to 6 winning setup. If you see 5 to 6 winning setup, you are a good trader. Sir, if you trade 10 times and you see 5 setup that works, you are a good trader. And that's what we are going to test in between now and next week. You are going to be analyzing market yourself. You pick trade yourself. 10 trade. I want to see 10 trade from you. Let's see. Don't be afraid. Don't be just trade. It's demo. At least test. Even if you are still doubting if this is what you would do. Oh, I don't think this trading is what I want to do. Try 10. Say, just give it a try. Okay, let me try. 10 trade. Your TP should be between 2% to 2.5%. So let's say from your 5,000, you want to trade aggressively. Trade anyone you want, either conservative or aggressively. 5,000 account. That means you are risking $500 per trade. All right. First trade, bam, 500. If it goes against you, it's taking 500 from you. If it goes in your way, it's bringing 1,000 or 2,000. It's bringing 1,000 or 1,250. So 10 trade. And if you want to go conservative, do 1 to 2% per day, per trade. Max 3% per day. So do 10 trade and see. If all your 10 trade fails, then trading is not for you. Based on what we have taught. If 10 trade fails straight up, trading might not be for you. Because if except everybody has 10 failed trades, then that means what we are doing is wrong. Do you understand my mathematics now? If everybody has failed 10 trade, then what we are doing is not right. If more than half here has at least 4 winning trade, what you are doing is correct. So that's what trading is. It has to be a calculated step that you are taking. A calculated step. One of the things we are going to do is, after we finish this, we will get profit account for everybody. So you go through demo phase first. Then once you pass the demo, you go to live. We pray that that vision will come to pass. And we just need one person to give us good profits. And everybody will be smiling. But everybody has to work. If you don't work, you will not share from it too. Yeah, from all of us here, we just need two people to give us profits. And everybody will be smiling. So if all of us have profit account now, and 2-3 people are able to scale into live accounts, and at the end of the month, these 2-3 people are able to get payouts, everybody will smile. And the only reason why you will not share in it is if you are lazy, you are not doing anything. So because we want to give everybody an opportunity. All right. So that is that for today. Risk management, very important. Very, very important. You don't need to win all 10 trades. That's why if one setup fails, don't be angry. Don't feel bad. Don't feel sad. It's part of the process. It's part of the process. And if your first trade wins, don't think that the whole thing will win. And reset. Don't be overcome. The first one wins. The second one, you now went to increase the maintain the flow. You know, when you maintain the flow, what you are doing is that you are already protecting your profits. Because now, if your first trade goes and you get profits, what happens is your next trade, you are trading from what? From profits, which will increase your confidence. So let's say first trade, you risk $500, and then it brought 1,000. That means before you go back to capital, you will have lost 2 trades. Before you go back to capital, you have to lose 2 trades. So let's say your second trade wins and it brings 1,000. Let's say 1,000 again. You need to lose 4 trades to return back to capital. You see the psychology here. It is patience that is making people not make profits. Lack of patience, greed, and what have you. They want to begin to scale. Oh, the money is 2,000. Now I have 2,000. If 2 goes, no, I'm good. I'm dope. I'm sharp. So, boom, they hit the whole 5,000. And that one now failed. They are now on 1,000. Let's keep building. Keep building. $2, $5, $10, $20. I'm telling you, you will be shocked that by the end of the month, you will have even tripled the account without you knowing. Just follow the process. Follow the process. Follow the process. Risk management. Follow the process. Protect capital. You already have profit. Protect capital. From your profits, you are trading from. In fact, some people are so wise that, let's say they want to use this method. They've made $1,000. Their capital is now 6,000. They are so wise that they will reduce the lot size. And instead of risk 500 to lose 2 times to go back to capital, they will reduce it to 250. That's wisdom. They reduce it to 250. That means it's 4 trade. So the next trade now brings 500. If it goes 250 goes, they are still protecting 750. This thing is easier said though. it's easier said. It is when you start seeing real money that you will now do it. He said, yes, now. All right, so any question? Huh? Okay. GBP USD. Yes, it's the pip count. It's the pip count. Like the distance between, for example, now, if between here where price is to that key level we marked, let me see. From here, 1.3569 to that key zone. It's like how many pips? It's like 22 pips. 22 pips. Now, these 22 pips, if you use 0.01 from here to here, is just $2. But you see, from here to here on gold, it's like 300 pips. Copy, Abi? Copy. Aha. Ah. Okay, I don't understand. Why is it coming like number one line?
The exact count.
Oh, totally closed. Okay. that movement that has space on GBP, on gold, is flat. Is one line. Do you understand? Is this it? It's very small. Okay, let me even see. Let me see. GBP. I want to see the distance. If I can measure the distance. Let me see if I can measure the distance. Is there a tape ruler? That's 14.4. Let me see. Why is it coming in 1,000? That's not what I want to see. Let's use even normal eye to look at it. Let's use brain just to calculate it. Okay, so from here to here, just my hand like this, Abi. Let me see. Let me go back to gold. It's like it's from here to here. Abi, it's almost like from here to here. Almost. Now, on gold now, this place 4,900. This is 4,916. Okay, let's just say 4,915 to 4,900. That's 150 pips. Do we understand? 150 pips compared to that wide gap of 20 pips. In GBP USD now, in currency pairs, 100 pips is very big. So that's why if you are trading currency pair, you will have to increase your lot size. If you are on metal, you are on indices, you are on silver, metal, silver, oil, Nasdaq, US 30, you will have to read. Oh, nothing happened to it. You will have to reduce your lot size for metals, indices. But if you're on currency pairs, you might have to increase your lot size. Sir? The lot size is your pip count, is your pip you use to calculate it. So if you are doing your analysis now and you want to know where your stop loss is, try to know the number of pips it is. So if on GBP, you on currency pairs, your lot size is, let's say, 20 pips plus your stop loss. Sorry, your pip is 20 pips for your stop loss, and you want to risk, let's say, $200, and it's 20 pips. What lot size are you going to be using? You'll be using lot size 1. Once it goes 20 pips, it's $200. But remember that 20 pips, if it is on gold, it's very low. Your stop loss can be 20 pips. On gold, silver, it's too small. Except you are trading on a lower time frame and you want to do a very tight stop loss. So if you are trading on metal like gold and your stop loss, and you are looking at your stop loss should be around 50 pips, 70 pips. You can even have a tighter stop loss. However, it's very close to your entry. So in gold now, you can be having like your stop loss around, let's say, 70 pips, 50 pips. So now you are now going to look at it compared to the lot size you'll be using. The lot size, if you are using lot size 1 for GBP USD, which is 20 pips, and for gold, your stop loss is 50 pips, you cannot use lot size 1. That's 500 is taken away from you. And that 50 pips we are talking about is very small. Okay, let's demo it. Let's demo trade it. Okay, open it there. Let's see. Unplug this and put it there. So I think we can go offline now. Yes.